Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world without needing a finance degree. Today we're diving into Regeneron Pharmaceuticals' Incorporated latest annual report. A massive document filled with enough numbers and warnings to make your head spin. Oh, but don't worry, we have a super secret weapon to make this digestible for you all. Stick around as we decode what Regeneron is up to and if their business is as healthy as their pipeline. Alright, so we've got the big one here, the 10K report from Regeneron Pharmaceuticals Incorporated. This is their yearly rundown of everything important business-wise and financially. Normally these are dry as dust, but Regeneron has some serious products and potential blockbuster drugs, so there is a real story here. Let's get right into the money numbers. For the year ended the 31st of December 2025, Regeneron pulled in a massive $14.3 billion in revenue. That's up from $14.2 billion in 2024 and $13.1 billion in 2023. So revenue is growing, which is a good sign. Now, where is all that money coming from? Look at Eylea HD in the US. In 2025, it brought in nearly $1.7 billion. That is a huge jump from $1.2 billion in 2024 and just $165 million in 2023. This drug is clearly a massive growth engine for them. But then we see Eylea, the older version. US sales for Eylea took a big hit, dropping from $4.7 billion in 2024 to down around $2.7 billion in 2025. This is a concerning trend. It's being outpaced by Eylea HD likely and also facing serious competition. The trend here is clear. They are banking on the new version to make up for the old one's decline. Then there is Libtayo, another key drug. US sales are climbing nicely up to over $944 million in 2025 from $787 million in 2024. Global Libtayo sales also saw a good increase, reaching about $1.45 billion. This shows their efforts in cancer treatments are paying off. But Regeneron doesn't do everything alone. A huge chunk of their revenue comes from collaborations. Their deal with Sanofi alone brought in over $5.8 billion in 2025. That is a big increase from $4.5 billion in 2024. This is mostly profit sharing from drugs like Dupixent and Kevzara. Dupixent sales globally, that drug partnership amounted to over $18 billion in 2025, illustrating the power of their collaborations. Their collaboration with Bayer for Eylea outside the US also contributes significantly, bringing in about $1.4 billion in 2025. However, their share of profits from this particular deal decreased slightly compared to last year, which is something to keep an eye on. Now, while they are making a lot of money, they are also spending a lot to make more money. Research and development costs in 2025 were almost $5.9 billion. This is up from about $5.1 billion in 2024 and $4.4 billion in 2023. They are doubling down on innovation, investing heavily in drugs like fianlimab and linvoseltamab. This high R&D spending is typical for biotech companies and signals their commitment to future growth. The flip side of sales is the cost to make those goods. Cost of goods sold was around $1.14 billion in 2025. This has been steadily increasing alongside their sales, but their gross margin on net product sales dropped from 86% in 2024 to 82% in 2025. This means they are making less profit on each dollar of product sold, which could be due to rising manufacturing costs or increased competition driving down prices. Now, for a really interesting number, other income and expense was a whopping $1.7 billion in 2025. This is mainly due to gains on their investments in marketable securities. They made almost $1 billion from these investments alone in 2025. That is a massive boost to their bottom line, showing smart financial management beyond just drug sales. With all this activity, their income tax expense also jumped significantly to $725 million in 2025, up from $367 million in 2024. Their effective tax rate is still relatively low at 13.9%. This is partly thanks to income earned in lower tax foreign jurisdictions and research tax credits. However, new tax laws are coming into play, introduced by the One Big Beautiful Bill Act, which will likely impact their future tax obligations, showing how intertwined government policy is with corporate finance. Looking at how they manage cash operating activities, generated almost $5 billion in 2025. This is a healthy increase from $4.4 billion in 2024. This shows they continue to generate strong cash from their core business operations. However, they are investing heavily back into the business. Capital expenditures were nearly $900 million in 2025, and they expect to spend between $1.1 and $1.3 billion in 2026. This huge spending is for expanding their research, manufacturing, and office facilities, indicating a strong belief in future growth and expansion needs. Regeneron is also actively buying back its own stock. In 2025 alone, they used around $3.4 billion to repurchase shares. This is a lot of money, and they have another $1.4 billion authorized for future repurchases. When companies buy back stock, it can signal confidence in their future and potentially boost share price. They also started paying dividends in 2025, a positive sign for shareholders. Now let's talk about the scary stuff, the risks. Regeneron is heavily reliant on Eylea HD Eylea and Dupixent. If sales of these falter for any reason like competition or regulatory issues, it could seriously hurt them. They also face intense competition from other drug companies, including biosimilars, which can significantly eat into market share and profits. Another big risk reimbursement if insurance companies or government programs like Medicare and Medicaid don't cover their drugs, or if they slash reimbursement rates, Regeneron's revenue could take a massive hit. Governments are also starting to negotiate drug prices directly, which could put a lot of pressure on their bottom line. And like many big pharma companies, Regeneron is no stranger to legal battles. They are involved in numerous patent disputes over Eylea with companies like Amgen and Samsung Bioepis. While they've had some wins and settlements, these lawsuits are costly and time-consuming, and their outcome is always uncertain. They also face significant lawsuits from payers like United Healthcare and Humana alleging anti-competitive practices. These legal entanglements, along with government investigations, add another layer of risk. So what is the big picture here? Regeneron is a company with powerhouse products like Eylea HD and Dupixent that are driving significant revenue growth. Their investment in research and development is immense, showing a strong commitment to future breakthroughs. However, they are not immune to the harsh realities of the pharmaceutical industry. Fierce competition, pricing, pressures from payers, and constant legal battles are all major headwinds. Their massive cash reserves and ongoing stock buybacks alongside a new dividend policy demonstrate financial strength. But the reliance on just a few key drugs and the increasing cost of doing business present significant challenges. The company appears to be navigating these complexities with a mix of innovation, strong financial strategy, and a proactive approach to legal and regulatory issues. What is your take on Regeneron's strategy and their financial health? If you enjoyed this deep dive into Regeneron Pharmaceuticals Incorporated, please hit that like button and subscribe for more corporate decoding. And don't forget to join our Discord community linked in the description for more direct conversations and insights. Thanks for watching, and we'll see you in the next video.